Bitcoin is currently retesting a major short-term horizontal support sitting at $27,000. A loss of this level will result in a short-term correction potentially as low as 26.5k. In today's video, we're going to be reviewing the short-term technical and structural levels, as well as running a complete analysis for Bitcoin in preparation for the next move. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to discuss Bitcoin on the short time frame, as Bitcoin has just lost, in the middle of filming this, the $27,000 support, which we discussed in the intro. We have seen quite an aggressive correction from 27,000 all the way down to our 26.85. In fact, we saw the rejection at 27.4 in that upper liquidity zone. In today's video, we're going to be discussing the next move for Bitcoin, what this means for Bitcoin, and of course, how we can prepare on the short term for the upcoming week. Before we get into the video, smash the like button, hit the comment button, and subscribe to the channel. We do daily videos on Bitcoin focusing on the facts, the data, the technical and structural information, the news events, and the economy. No BS, no hype, no emotion, pure raw TA. That is the kind of content you're interested in. Join us on Telegram, the second link down below. You've got access to all of our charts, our updates, our analysis, our exclusive updates in here on news events, on Bitcoin, on everything in between, guys. Everything in here is posted for you guys to keep up to date with the market. It is all key and important information. We try to keep it as least fluffy as possible. We post the relevant updates for Bitcoin and the economy in this chat. You can get access to it by the second link down below. If you are interested in joining our VIP channel, where we have exact trading signals of exact entries, exact targets, exact stop losses, and so much more, including our group chats, you can go ahead and contact me via the pinned comment in the free channel. You can find all the membership information here, including membership information on the main trading channel and our group chats, by clicking the links below. Let's get into the video, guys. And as I said, Bitcoin has lost the $27,000 level. In fact, before I started filming this, we mentioned we're currently retesting 27,000, and we have just lost it. If you're in the free channel, you would have actually seen us talk about this earlier on today. We said we got rejected from 27,400. We're coming down to retest 27,000. A loss of 27,000 will result in two targets. The first one being 26.85, which is the POC, which we have now reached, and the next one being 26.6, being the lower support range, which it looks like we're moving toward. At the moment, guys, we'll take a look at the market data, we'll take a look at the DXY and the broader markets, and then we'll come back and discuss the short term for today's video. So the market data, currently liquidations are up to 50 million in 24-hour period. We're up 91%. Again, a lot of these liquidations most likely coming from those long positions, or should I say those late long positions, on people who entered upon that rally up to 27.4k. Moving back to the data, guys, we can see the 24-hour volume is sitting at 47 billion, up 34.8% for the 24-hour period. As per the month of June, we are currently down 0.7%. Not too much of a big deal, guys. We're only right into the beginning. We're only 5 or so days in, so not really too concerning. Moving on, guys, we can see the volatility index for the 30-day period is very much still stagnant. We're slightly moving downwards, which of course is bearish. And of course, on the 60, again, pretty much just pushing absolutely sideways. Moving back to the monthly chart over here, guys, we can see the negative 0.7 is expected, because if we do look at the higher timeframes in Bitcoin, particularly the monthly chart, what we could see, or what we can see, is that the last monthly candle actually closed out bearish. It was a bearish candle. We saw a bearish engulfing candle at the end of what was quite an aggressive move upwards. It's about an 88% move upwards, all green candles, followed by a bearish engulfing candle. A bearish engulfing candle being a candle close that closes below the prior candle open price. So that's the prior candle open price. This is a candle close. If that occurs after a large move, it represents a shift in momentum. It represents an overall shift in direction. And on a higher time frame, it can actually represent a high time frame reversal is developing. It doesn't mean it has developed. It means it is developing. We'll come back to that later in today's video. Moving on to liquidations, we can see with the $50 million in liquidations, we saw the majority, so around 60% come from longs and around 40% come from those short positions. The DXY is moving on up, guys. We actually saw a short-term pullback for the DXY. It looks like it has bounced, guys, in the last 24 hours, moving back up to 104. Again, the uptrend for the DXY remains intact unless this uptrending support represented by this black arrow is lost, meaning if the DXY drops below this level, we can expect a correction. This move over here will be very, very bullish for cryptocurrency, will be very, very bullish for stocks. If the DXY moves back upwards, however, this is going to be bearish for cryptocurrency and bearish for the stock market, guys. If we do move upwards, we're expecting a target of 105 to 106. If we do break this uptrending support level, we expect a target of 101.5 to 100 on the DXY. Again, a lot of this movement on the DXY is going to be heavily influenced by the upcoming economic events, such as inflation, CPI, such as PPI on the 13th and 14th, and more importantly, on the 15th, their interest rate decision. We also do have the debt ceiling announcement, which is coming very soon in the next 48 hours, which again could potentially influence the DXY as well. So take it with a grain of salt right now, watch the key levels, but the short-term movement, meaning any movement that occurs between these levels, should be ignored. The only area of significance is now a break above this resistance or a break below this support. Everything else should be considered fluctuations and consolidations and basically volatility due to the upcoming and current news events. Moving on to the S&P 500, you can see we broke through that resistance perfectly, actually retesting that resistance level we're discussing over the last couple of weeks. We said if we do break above this horizontal support, we can expect a move upwards to retest this resistance. Of course, this was an uptrend. A rising channel is a bearish pattern, but it is still an uptrend, and the uptrend is intact while this lower uptrending support line remains intact, and therefore the possibility of that move upwards was quite high. We saw that move achieve, we saw the rejection, and we are currently retesting this level. I do not expect any more upside for S&P 500 until this resistance is broken. If that resistance is broken, you can expect a potential move as high as this uptrending diagonal resistance as per the rising channel. However, if we do come down, guys, and we do retest this uptrending support, if that is lost, that will declare this uptrend is over and the price will develop a new trend, potentially going either sideways and consolidating before it goes upwards, or more likely, which would be a move toward the downside considering the current structure. Moving on to the Dow Jones, again, guys, we haven't seen too much occur. We are still seeing the price consolidate between the apex, which of course is represented by the converging point between the horizontal resistance and the uptrending support. Again, anything that occurs between the apex or in the apex should be considered volatility, should be considered just normal price action. What we're looking for is a weekly close below the uptrending support or a weekly close above that horizontal resistance. Let's go ahead, guys, and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And before we get into the short term, we're going to talk about the high time frames really quickly. And today's video is going to be 90% short term, but I do want to discuss one thing on the high time frame really quickly, and that is the current high time frame levels and what will it take for the bulls to reclaim control. Because really quickly, it's important we set precedent, and precedent is we are on a downtrend on the daily, we are at risk of losing the weekly uptrend, and the chart is looking weak. Unless that flips, we do not expect the price to go upwards, and therefore we should be expecting downtrend with looking for key points of reversals. So the key points of reversals, when should we take longs in favor of shorts? When will the chart, from a structural and technical perspective, start to look more bullish on the daily chart? We need to see two things. We need to see, number one, a break above, and not just a break, we need to see a daily candle close above the key downtrending resistance, which is this black line. If we go ahead and draw an arrow onto it, it makes it a little bit easier. That is our downtrend right over here. For us to become bullish again on the daily chart, okay, we need to realistically break above our daily downtrending resistance. It makes perfect sense. Now, we know that just 1 point of confirmation is not nearly enough. We need 2 points of confirmation or more. So we look for confluence. What we're looking for is two things: a break of the downward trending resistance, as well as the RSI pushing through the downward trending slope on the RSI. That representing a shifting momentum, this representing a shift or a break of the downtrend. Those 2 points of confluence will push the price back upwards and create a bullish daily trend. Until that occurs, the trend is bearish, and until that occurs, the weekly trend is at risk of a correction, potentially lower. If we look at the weekly chart, guys, we can see we have got rejected from that 28 to 30,000 level. We are sitting underneath that major resistance. That 28 to 30,000 level, or $30,000 holding a little bit more significance, is of course, if we go to the macro chart, the yearly support of the prior bull run. If we look at the prior bull run low over here, which represents the resistance we kind of held, or support we kind of held during the most of the bear market, when we lost that level, we increased that. We had that massive dump, and it happened in every single scenario so far. So that 30,000 level represents that horizontal support. If we look at the monthly closes above that level, every time we close a monthly candle above, we see a massive rally. So it triggers, or what that 30,000 level represents, is a bullish macro trigger, meaning the bullish macro move will occur when $30,000 is broken and closed above on the monthly chart, and therefore it is a major resistance. So we are in a weekly uptrend, we're in a daily downtrend, we are not in a macro uptrend yet. On the weekly chart, we are starting to see points of weakness. We can actually see on the MACD over here, we're about to get a crossover, and we're very close to actually pushing this into the negative momentum territory. Right now, we have positive momentum according to the MACD. According to other indicators, we have negative momentum, such as the RSI. It represents a shift from positive to negative. According to the market cipher B, we have seen a shift from strong positive, okay? Remember, positive is above the 0 point line, negative below. So we are positive, but we are moving down. So it represents a shift from rising positive momentum to falling positive momentum, which represents weakness. Okay, we have weakness in the momentum here, represented by the MACD. We have weakness. We can see we have weakness. Every single one of these bars represent momentum. We can see the green, or progressively increasing green, represents increasing momentum. Progressively decreasing light green represents decreasing momentum. Upon the point of which we go to red, we have a shift from positive to negative momentum. And therefore, on the weekly chart, we can safely say momentum is starting to flip bearish. It is starting to flip down. Along with that, guys, if we bring up some other indicators such as a Gaussian channel, we can see before we even look at a macro bullish trend, we need to break above the upper resistance, or the upper band of the Gaussian channel. Where does that sit? Well, it sits around $28,000 to $29,000, guys. So we do need to break above that. Going back to the daily chart with no coincidence, to see any of that occur, we need to get back above this downtrending resistance. And therefore, this downtrending resistance on the daily is the most important level on the chart right now to be looking at on the higher time frame for a shift from the current downtrend into a bullish weekly uptrend. If, however, we continue down here, which we'll discuss in the short term, we're going to talk all about that in a second. If we lose these low supports, we could potentially be pushing back towards this level here. And of course, this is going to be the weekly uptrend support level, meaning a loss of this green level at 24.4 to 25.2 will push the price from a weak bearish trend into a bearish trend, meaning the weekly bullish trend will officially be lost if we break below this level. You can see, according to our green arrow, since we broke above, we have this green arrow, meaning we are in a weekly uptrend. This green arrow started above 25.2, and therefore if it's lost, we go into our downtrend. So keep that in mind, guys. Watch these charts very closely. Let's get into the short term, because that is what the point of today's video is, because a lot is going on. And again, we're going to quickly go over the short term, the key levels, and then discuss the next move. If you've been watching the channel, if you've been paying attention to the videos, if you've been paying attention to our Telegram and our charts, you would know that we have been in this horizontal consolidation for what feels like eons, guys. It feels like so long, but it only really has been just over about 3 weeks. But 3 weeks in a market for the sideways consolidation is quite a fair bit of time. The range of this consolidation is around 4.5%. We've had deviation above, we've had deviation below, represented by these moves, and again annotated by these deviations. At the moment, the key levels we're looking at is, of course, is the POC level, which we are currently retesting, actually just breaking below, our range high resistance, and our range low support. The other key levels we're looking at are, of course, our liquidity zone, which is our bounce point right over here, which is our major liquidity zone or bounce point for the bulls, which we can see if we draw a trend line up, we can see it is almost testing, which is sitting around 26.6K. And again, the next key level we're looking at is, of course, going to be the major support toward the downside. This downtrending resistance here is represented by the daily downtrend, which we do need to break above to flip bullish. So really quickly, before we get into anything else, let's go ahead and define the trend biases. At the moment, we are in a range bearish trend. You can see, daily bearish sub 28K, meaning below 28K, below this downtrending resistance, we are bearish. Okay, moving forward. Any move from the top side of our range high toward the downside is going to be bearish. So since we broke down from this level and we have been down ever since with rejection, this trend right now is technically range bearish. We are technically in a bearish trend within the range. That is the overall narrative or direction of this trend. For the trend to flip bullish, we need to break above this resistance. If we break above 27.4, we're going to push to 27.8 to 28,000, which will allow us to retest this level. So on the short term, I would not be bullish on the range. And we're looking at the 4-hour chart, guys, not like the 5-minute chart. On the 4-hour chart, on the 8-hour chart, on the 12-hour chart, on the daily chart, I wouldn't be bullish unless 28K is broken. And that is very clear as we discussed from the start. On the same time frames, guys, if we're looking at the bearishness, I wouldn't be overly bearish right now, because when do we see the price get that massive move toward the downside? That is going to be upon the loss of our range low. So equally, if we break above our range high, we will move up. We'll also move down if we break below our range low. The range low is sitting at 26.2 to 26.4. If we do break down from range low, we can expect a move to 26 to 25.8. And if we do lose that level, we are moving downwards into a strong downtrend on the 1-day chart, which will take us to retest that uptrending support, about horizontal support represented by the weekly at 25.2 to 24.4. It is not looking very good for Bitcoin on the daily. On the short term, it is not looking very good for Bitcoin. Let's discuss the next move. So we're going to zoom in now. Let's go down to a 30-minute chart. As we can see, guys, we have lost the POC. The POC level, which we'll go ahead and draw in, is sitting at 26.85 level. We have lost that level. On the short term, what we saw was a uptrending support. We had the uptrending support right over here. We actually dropped below the uptrending support, resulting in a strong correction to 26.85, our first target after 27. Target 1, target 2. If this trend continues downwards, we actually do expect a move to 26,600, which is going to be the major liquidity zone as per this level here. We have seen multitude of bounces. We've seen 1 bounce, we've seen 2 bounces, we've seen 3 bounces, 4 bounces, 5 bounces, 6, 7 bounces in the last 3 weeks at this level, and therefore should be a point of confluence, an area of which we are looking to either find support, lose, or bounce from. So we're watching that level for the next target. On the short term, I do expect the price to actually move toward that level. So I'll be watching for the price to move here. From here, I'll be looking for 2 things. We're looking for bounces or signs of continuation. So if we do continue, we're moving towards this range low. So we did see a strong move toward the downside, guys, and of course we have seen that move now to retest those 2 key levels. We do know what the next levels are for Bitcoin, and we know why these levels are so important. So the question is, what are the probability of a move lower? What is the probability of a move back over the top? And the key way to answer this is to simply say there is absolutely no way to really tell for certain right now as the current structure we are developing is a neutral pattern. This is a horizontal consolidation, and therefore we have almost equal probability for a move up as we do for a move down. Now, if we do look at the overall structure, which of course is a horizontal consolidation after a move down, we do have a very slight advantage for a continuation of that trend. Generally, when we move down into a consolidation phase, we continue that move after the consolidation is over. This represents an attempt to reverse the momentum, an attempt to move back upwards. So if it doesn't actually succeed, if we do not get above this level and get that momentum shift, we can expect the price to move down. And because I just said that, because that is what it is, that should ring alarm bells in your head and make you aware that, you know, this trend is actually bearish until we get that validation. Because where we are sitting now is, this is a bearish trend. This is a consolidation that is trying to flip the chart from bearish on a daily to bullish on a daily. And if we do not get that flip, if we do not get that momentum flip, which is that downtrending break, downtrending resistance break, we will remain bearish and we're likely to continue bearish on the short term. So definitely keep that in mind, guys. Definitely be watching those levels. I think that's about it for today's video. I think I've summed everything up quite well. If you've got any questions, leave them down below. I don't believe there's much more to talk about today. Watch those levels like a hawk. Keep your eyes on them, because this chart is absolutely going to help you moving forward with a short-term price action or the macro price action. The two key levels you need to watch on the short term are going to be the higher range, the lower range. The two key levels you need to watch on a high time frame is a downward sloping resistance and, of course, the lower horizontal support. Those are the triggers. This is a high time frame bullish trigger. This is a high time frame bearish trigger. This is a short time frame bullish trigger. This is a short time frame bearish trigger. Watch those level, guys. Thanks for watching, and I'll catch you guys in the next one. Cheers.